Okay, good morning and welcome to our second session in our Farm Filings tax series. This morning we will once again be joined by Dan Coulthard and Kristy Snyder of Compeer Financial to help us dig even deeper into strategies and importance of record keeping. I do want to first go over the Zoom rules real quick. During this call, we'd like to keep all the participants' video and audio turned off so that we can maintain as much bandwidth as we possibly can during this call. If you do have questions during the call, you can use the chat box, which you can find by navigating to the bottom of your Zoom screen, and a toolbar should pop up and you should find a little chat bubble icon. And if you press that, chat box should pop up and you can type your questions in there as we go. We will wait until the end of the presentation to address questions. All right. So I am your host. I'm Cassidy Delordo Blackwell. I am the Farmer Training Program Manager here at the Land Connection. We are based in Champaign, Illinois, and we serve farmers and eaters from throughout Illinois and beyond. Our mission is to train farmers in resilient restorative farming techniques, inform the public about where their food comes from and why that matters, and work to protect and enhance farmland so that we and generations to come will have clean air and water, fertile soil, and healthy, delicious food. You can visit us online at thelandconnection.org and sign up for our newsletter to stay up to date on everything we are doing. This series is made possible by support from the Roots to Farm Alliance. Roots to Farm is a collaborative effort committed to providing resources to farmers that are growing their businesses in the Chicago food shed. You can find out more about Roots to Farm resources and events by going to roots2farm.org. And a very big thank you to all of our 2021 farmer training sponsors. Particularly very big thank you to Compeer Financial for supporting us and for putting on this presentation for us. So now we will move on to the main event. Compeer Financial is a member-owned farm credit cooperative serving and supporting agriculture and rural communities. They provide loans, leases, risk management, and other financial services, such as tax and accounting throughout 144 counties in Illinois, Minnesota, and Wisconsin. Why did you just advance? Kristy Snyder has been with Farm Credit for 9 years. She lives in Sauk County, Wisconsin. Kristy has a master's in business administration with a concentration in accounting and over 16 years of experience as an accountant. Daniel Coulthard has been with Farm Credit for 6 years. He lives in Dane County, Wisconsin. And Dan has a Bachelor of Science in Dairy Science, as well as a Bachelor of Arts in Accounting. All right, and I'm gonna pass it over to Kristy and Dan to share with us.
Thank you, Cassidy, and good morning, everybody. We are back again today, hopefully getting a little deeper dive into record keeping, and we are looking more into on the payroll and 1099 side, your vendor side, for your records today. Going into your payroll and your 1099s, first you need to decide and define who is your employees and who is your 1099s. You can go to your next two slides there, Cassidy. First of all, an employee is a person generally that comes to your place of work and is defined, and you have services or you have control on what they do. Similar as family members, they live with you on that end of it. 1099 people, or what we like to consider as custom hire, are individuals that you have been hired to come out and do a specific job or business because don't have all the tools or the professional expertise maybe to perform that job. We always like to tell our customers when we do the record keeping, don't look at us as, oh, I got to go to the accountant. Think of us as a custom hire for your job, that we're doing a specific for your business to keep track of all your records and all that to maintain good sound records for you. Go ahead to the next slide. Employee forms required for hiring: your federal I-9, your state W-T4, and the federal W-4. And on the board is what the required to keep the forms for the 4 years for most, and the I-9 as well as for 3 years to the hire after employment. In addition to that, when you hire somebody, you should have 2 forms of ID, a driver's license, social security card, or a single passport will suffice for both records on that end of it. It's just one of those things that they have the right to work. You've got your bases covered from your perspective, that if you ever get audited, these are the people that work for me. This is the forms that I received. This is how I pay my and bill, for the taxes and all that you're being billed for. Your next slide, please. Then you go to your payroll liability tax forms. The 941 quarterly tax return and the UCT quarterly wage report, or known as SUTA. These are done quarterly. For farms, this is not only done, we'll reach on it a little later, but the SUTA is only done quarterly if you have reached a certain wage report for each quarter of operation for your payroll taxes. The 941 does not apply to farming unless you have your own, like maybe if you're a farm to table, and then that would refer to like maybe the shop area or the business side of the farm. The farmers normally file under the annual forms of the 943, which is done yearly, and you reconcile it yearly at year end, as well as the 940, the employer annual federal unemployment tax return. This only needs to be returned, filed if they meet that certain wage requirement, again, on an annual basis. WT7 is the annual reconciliation for the state's payroll withholding to the state of Wisconsin. It is very similar in the state of Illinois. It's the 501, I believe it is, and as well as your W-2s. Next slide, please. Your FUTA is your federal unemployment tax based on the first $7,000 of wages paid to employees. Based on 6% of taxable wages, it basically comes out to $42 per employee that you have on staff. It's due the last day of the month of the quarter for if you reach the $500 threshold. Some farms that are small enough that they never reach that $500 on an annual basis, that money would be paid in on an annual basis. But many, like on our end, when we do all your quarterly taxes, we still like to make that payment when we're making all of them, just so that we make sure that we've captured it and don't forget it and leave that one payment to the end. So it's kind of one of those, what the preference is on who's doing your work and how they feel your taxes, and allow you to also help make those adjustable wages and those payments for you. This is also the federal unemployment tax based on, for farming, is based on the quarter system. If you've reached the $20,000 in payroll taxes, you would be then subject to the FUTA tax rate. If you do not reach that $20,000 in a quarter, you do not have to pay the federal unemployment tax. Next slide. The FUTA is the 940 ag employers, as I've stated before. The cash wages are paid $20,000 in a calendar quarter, or 10 or more employee ag workers during at least part of the day, or 20 more different weeks in a preceding calendar year. Also with that, the wages, you need to, if you're over in 1 quarter of the calendar year, you generally go back and pay federal unemployment tax for the whole year then, and going forward you would, as well as for the SUTA rate going forward.
Yes, so just to clarify that, if you become subject to FUTA in your 3rd quarter because you went over, you would actually go back to the beginning of the year and capture all of that then.
Okay, this is where a lot of farmers and that always think that they don't have any differences. So if you are classified as a farmer or a 943 filer, a farmer has $20,000 in a calendar quarter, 3 months to reach that threshold. If you are a non-943 filer, such as a 941, once you've reached the $1,500 mark in a quarter, you start to pay federal unemployment as well as state unemployment. So it's kind of one of them, they think that they are getting ripped off, or a lot of times you hear them will say, well, why do I have to pay all these taxes? If you're a regular business, go to the grocery store, for example, they're paying unemployment on all their employees at $1,500 in a quarter. So, or not their employees, their whole total payroll. So they are paying a lot of unemployment on a lot of people. So that's why some of these people, yes, you like to hire part-time people and not make up the total wages. But remember, if you're a filer and you have a lot of part-time people, they're paying extra tax on those individuals because of that lower threshold dollar figure for a calendar quarter. Farming, you've got that 20,000, so you have a little more, or if you're a 943 filer, so you have a little more leeway within how you look at paying your individuals if you want to be on a part-time or a full-time basis. Next slide, please. In the state of Wisconsin, the SUTA state unemployment tax is based on $14,000 of gross wage. It's due the last month of the following quarter, and it generally kind of follows that federal unemployment. If you file federal unemployment, you're going to end up 95% of the time having to file the state unemployment tax. So, and they are separate taxes. Unlike the federal unemployment, the state of Wisconsin SUTA tax, I know as well as the Illinois, will go down or up based on your business. If you've had more or less claims to hit against your pool of money per se based on your total payroll. A lot of times in the initial, they will have a beginning pay rate for tax assessment. In the state of Wisconsin, it's 3.05%. You know, then based on your payroll, if you've had unemployment cases or charges against yours, what you're paying, it may go up or down based on of that kind of payroll. For instance, I know we work with a couple trucking companies that haul gravel. You know, they're dump truck operators. You know, their SUTA rate is extremely high because they don't have any work through the cold season. So they're being paid unemployment at that time. So their unemployment rate is a higher rate versus someone who does not have any claims against that pool of money that they've set aside, basically. Ag employers on this is at that $20,000 per quarter. So it's kind of one of them things. It's, well, as we had stated before, if you go over in a quarter, such as your third or fourth quarter, you end up going back to the first quarter and paying the full year on that. So it's kind of one of them things. If you know you're adding business or individuals and your payroll is growing, it may be one of those that you end up starting to file earlier, and to help avoid that, or if not pay that, at least maybe set money aside to start paying that, because it is a tax that can be pretty hefty on a lot of individuals, especially if you're starting out on a non-ag, not on a 943, but like on a 941, where your payroll is such less. So, I mean, you look at a business such as a diner, you know, have a lot of individuals that are going to go over. They're paying a lot of tax on new money for individuals working for them, and that extra 3% figured in on top of that is something a lot of you kind of forget about when you say, well, I'm just paying my employees, but the taxes are also part of how a lot of people want to know and figure out an end price for their goods. Next slide, please. SUTA for non-ag, I guess I got a little ahead of myself there, but it's that 1,500 in that calendar quarter. And if you employ one or more employees for part of the day in 20 or more different weeks in a preceding year or the current year. So that's why we're saying when you have your payroll, you're not just paying your current employees, you're also paying extra taxes that go along with everything in order to maintain a healthy business, to satisfy the states as well as the federal government, in which you are becoming a pool of money for all that to take care of yourself, as well as other potential businesses through the state or through the federal government. Unlike last week, we kind of talked about the guaranteed payments and draws. Guaranteed payments are made from partnerships to a partner for rent of services or for basically their time spent within the business. Draws and distributions are amounts for a partner that will reduce the partner's capital within the business. The guaranteed payments are a tax expense for the business. You're paying someone to come out for, as maybe a silent partner and as an individual to get their money back. Draws is basically money out to the partners to have their expenses to be taken on their personal side, and it is basically the draws or distribution is kind of the individual partners W-2s per se, when you want to look at it from paying people. Next slide, please. Vendors and 1099s. This gets to be a big, I don't know, misconception or misnomer for a lot of individuals. Anything that you pay someone $600 for within a calendar year, you must perform a 1099 unless they are incorporated INC, not LLC, INC. 600 for rent, machine hire, repair services. And if you got a person that says, well, I only did $700 with them, the bill in which you receive from them must have the labor and the work performed or the repairs, supplies they used broke out in order to avoid those 1099s. 600 for attorneys, veterinary medicines, very similar, and $10 more for dividends as well as interest. And a big thing that we get on this is what we like to say, like when you're paying your employees, If you do not have this filled out, do not pay them. It's just kind of one of those, that way you've got your ducks in a row per se. You're ready for a year end, you've captured their business information. Basically, this is kind of, you're hiring a custom hire person to come and do the work, and because you do not have equipment or tools, but it, in the eyes of like the federal government, it's kind of per se as employee type, in which you're paying people to come and do work for you, but they're not employees, but it's just a way of defining extra payroll for your general business expenses. A lot of individuals will try and get out of it. Well, it wasn't that much or everything, but this is becoming very common practice. Many people know about it. If they try to say, or what are you trying to do this for? It's very common practice. It's not you're trying to get any information to them or whatever. It's just a way of tracking expenses to make sure that everything is good for what you have for the year. This is kind of the test for an independent contractor, or for which you would 1099. They would have their own separate business. They obtain a federal ID or file self-employment tax returns. They do not have to have a federal ID. They can operate under their own social security number if that's how they operate their business. From that end of it, they offer specific contracts, reasonable for main expenses, satisfactory completion of work services, receive compensation under a contract or job permission, realize profit or loss, reoccurring business liabilities, and relationship of business receipts. This is kind of important. I have been involved prior to coming to Farm Credit here. A business that I had worked with prior had an investigation into payroll, wage, employee versus subcontractor. The company lost their bid for everything, and then they had to go back that whole audit period and pay in all wage expenses for that. So it's kind of like one of them, you know, I'm just going to pay Joe, the neighbor, he can come here and just work, and I'll just give him a 1099 and let him file everything. Well, sometimes it works that way, but a lot of times if things show up and red flag, however, whatever the trigger points are, that will be a big misnomer, and it can be fined because they charged you for all that time period. And then there was penalties on top of that because you were late filing it and all that other, and then the interest tacked on. So it may not be a very big total amount, but after interest and penalties, it can get kind of out of hand. And one of these things, if you're looking at, you know, you're going to have work, don't be afraid of payroll. Just do it like you do everything else, hit it head on, get in front of it, and work with somebody who can help alleviate and do that for you. It can be an easy process. It doesn't have to be one of them painstaking things. Oh, I got to pay him, I got to pay the taxes, I got to do this. If you set it up right and work at it, even if after you start, you know, as your business grows, you pay them 1099 and you see that you're growing, make them employees, make everything so that everything will come out in the end. And then we are at questions. So.
Okay, thank you, Dan and Kristy. That was great. Let Let me see. And we've been getting some questions here into the chat box. So let's go for it. Chef Fresh asked a question that I believe was related to unemployment, but you might need to clarify, Chef Fresh, about whether it was only for farmhand labor and discludes them if they're doing other work like administrative work. And I don't know if that was a question related to the
No. If the individual that is working for you, you're paying wages to, it doesn't matter if it's farm labor, if it's administrative, if they're part of your total wage expense or payroll expenses, they would whole, if they have qualified based on the categories, the 1,500 if you're a 941 filer, the 20,000 in the quarter for a 943 filer. It doesn't matter if those wages are farming, repairs, or administrative, they would all qualify for your wages to be reported for your SUTA report.
Okay, Chef, I hope that answers your question. We've got a lot of 1099 questions, so get ready. So do you need to have a 1099 for rent that you pay, or do you need to have a 1099 for a product or multiple products that you purchase from a single vendor?
Oh, yes. You would issue a 1099 for rent as long as they're not a corporation. And then for product, you would not issue a 1099. So that's where Dan said earlier, you would want them to separate out their services versus the material, because you would not have to issue a 1099 for the material part, but you would have to for the service part.
Okay, and that is different though for the rent. You do have to do a 1099, but a physical tangible product, you do not have to do a 1099.
Correct.
Ian asks, would a nonprofit acting as a fiscal sponsor for a farmer's market or a collective CSA receiving payments and distributing them need to send 1099s to all of their participating farmers? It's a complicated one.
I don't know the total logistics on that from CSA going back out to the individual farmers, but from a tax perspective, that's something that you're paying an individual for labor as well as for their seed or their product. So it may be one of them where it's noted, but I would have to go back and investigating on that part of for a CSA to know if the individual owner of the CSA is responsible for sending 1099s to its member owners for the product that went out the door.
Okay, so that's a little bit more of a complex one. Okay, Nancy has a question about vet services. Not understanding vet services, I have them out to my farm to treat my cattle. Say I pay $2,500 in 12 months. Do I have to give them a 1090, or I assume Nancy is the vet. Do I have to get a 1099? What if I'm a rock star and hire a hairstylist to come to my home every 3 weeks for $2,500 in 12 months? Do I have to get a 1099 for that? I have a co-op, I fertilizer to my fields. Do I need a 1099?
Okay, so like custom hire is for services. If for a hairstylist, that's personal, so you would not use that as a business deduction and have to issue a 1099 for that. For vet services, yes, you would have to do a 1099, and that's even if they're a corporation. They actually have to be issued 1099 anything over 600.
Okay. What about if you have an agreement with exchange of housing for farm work? Does that fall into a 1099, or is that a new can of worms?
What we deal with a lot of here in you provide housing for your employees. We end up on it normally within their wages. Kind of what you're giving them $300. You're paying them $300 for housing, but you're taking it off of their paycheck as a deduction in order to capture your unemployment as well, for state as well as federal unemployment. It's kind of one of those things. You're giving them housing instead of paying them a higher wage, in which you would turn around and then pay rent. It's Peter to pay Paul. You pay them higher wage, and then you request $300 back a month, or you put however denominator figure that you're comfortable with, as well as with your tax consultant, in order to capture that wage. Because with that housing, you're more than likely taking deductions that are within that for your operation, for your expenses and all that, for maintenance and upkeep.
Okay. I hope that answered that. Ian just wanted to clarify, no 1099 needed for exchange of products, correct. Just for the labor involved. Michael asks, can you still deduct for custom hire if you do not file a 1099? So only pay, like, if you are under that $600 threshold.
If I understand the question correctly, if you do not issue 1099, but you technically should for custom hire, you could still deduct that as a business expense. It's just that you run into the issue that if you're audited, you may owe penalties.
What if it's under that threshold and you didn't have to give them a 1099 then?
Oh, yes. Like, that's still a business expense, so you can deduct it as a business expense, but then you don't have to issue the 1099 because they're under 600.
Okay.
In addition to that, there is also a spot on the tax return that asks if you sent out 1099. So it's kind of one of them. Do you do it or do you not? Do you do or do you not? The tax preparer is gonna, if you're the tax preparer or you're hiring someone to do your taxes, they have to mark that in order. So, be truthful with them, go forward with it and let them know, because they can also, I've seen where, like Kristy was saying, they can fine you, but they can also come back and say they won't allow those deductions on your tax return. So it can be a kind of a double-edged sword. So it's a very known common practice now. So you're not trying to pull anything over anybody. It may be new to a business that's just starting up, but for people that have been in the operation, and when you ask, they know, because most of the time you see within your bills that every 3-4 years a company will send out, we're updating our information. I mean, you can do the same thing for them, because owners may change, EINs change for business name to that effect.
And I know some people do come across the fact that people refuse to give them the information in order to issue the 1099. That's why it's a good idea to always get that information before you issue a check to them. However, sometimes it doesn't work out that way. But if they refuse, definitely document the conversations you've had with them, when you've reached out to them, and make sure you have that all in your file. So if it does come an issue when you're audited, you could say, well, I did reach out, here's the days. They absolutely refused to give me their information.
Yeah, excellent point, Kristy. That is, you need to keep your records and keep yourself covered in case you get audited. And it's even important to take note of those kinds of conversations. Can I ask just one question about if you're collecting a W-9 from contractors as you're working with them, at the end of the year, when it comes time to do your 1099s, if you're using a product like QuickBooks, is that able to just generate those out for you? Or
If you've gone through and set the vendor up properly, there's a spot in vendor setup, is this a vendor 1099, with all that. And then out of QuickBooks, you can run a report in order to get that information out. This year, I know they had to do a little update within QuickBooks because the way the 1099s were reported. It wasn't anything that you've done wrong or before, but now the 1099 switched for most custom hires, went to 1099 miscellaneous with the NEC filing. So it changed how it was filed to the government, but how you keep track did not change any. It's just a reporting issue.
Okay. Okay, Chef Fresh has another question. Someone is buying product from us and asking for a W-9, and they are issuing us a 1099. Is there some way that that gets resolved on our taxes? Since it sounds like a 1099 should not be issued for a product.
Well, that would be, I don't know why they would be from a product standpoint, but to resolve it, you're basically, if they're buying product from you, you're going to get money back. So basically the 1099 you receive back is going to show as income. So you may have to switch your sales, whatever, to match out of your sales to say it's custom hire or however they're looking at it from that perspective in order to make sure you're matching records up with your 1099 that you received. I mean, that's the big issue with what a lot of people don't understand if it's all sales, but you're getting 1099s, then where's the income? So when it's reported, you just got to make sure that you've got that covered within your sales, and you would have from that perspective. But why you're receiving a 1099 for your product produce that you're sending them, I don't know what their thinking is.
Sure. Well, Chef and TJ, it sounds like both have had situations where a nonprofit has claimed that they needed to issue a 1099 for products purchased. So I don't know. I mean, I could say from my own personal experience that could just be a lack of the nonprofit's understanding to just say that they assume anything over $600 they need to do a 1099.
It's okay to like follow up with those people too and just say, I'm only giving you a product, not a service. Why are you issuing me a 1099? And usually they'll have a reason why.
TJ says their CPA said it was required by law.
Oh, for a nonprofit. I'm not as familiar about nonprofits.
I guess what is the personal tax implication if you are a 1099 contractor when you file your taxes?
Implications meaning what?
So what do you have to pay on the income you earn as a 1099?
Well, most people, it flows in your 1099, but with that 1099, you're basically keeping track of the income that you've earned throughout the year. So that's kind of what you're paying on. And most people that we deal with receive 1099s, but their income is more than what you're receiving back from your 1099s. So unless you got that are trying to only what's your 1099s, and that's that can get bad because like this next year, we've had people say we received them that were sent out. So if you're saying, don't didn't send me any 1099, so I'm going to reduce my income. Well, and then it is filed, and then your income's not going to match. So then you're going to have an issue of that way. So that's why most businesses, what your business, and it goes through your checking account. So it's in and it's out, and it's just a way of in some of your sales per se, if you want to, be it that way, sales, custom hire, rent, or whatever that is from that perspective.
Okay, thank you. So Sophia and Chef Fresh I feel like these are a little bit of a social questions, really, in terms of dealing with the nonprofit situation. I don't know if you have any tips about how to speak to these sorts of situations when you are not seen as an expert in this, like how to push back if you don't believe you should be getting issued a 1099. Do you have any tips?
Well, I would say if I'm asking you for that, it's part of your records or my records, and I need my, you have it for your own records. If they're pushing back, stating that they don't need to give them to you, well, that's on their end of it. But for your records, you're being asked to capture that to, from you, from your accountant or whoever, and you're just trying to make sure that you've got everything aligned for your own. For them to refuse or say they don't want to be give it to you. I mean, like Kristy had stated before, just go and document that they refuse to give that information to you or whatever. And that's also maybe a situation where you try to find a vendor to when you business or business because later on, you don't want that business you deal with you got to go through an audit and I'm not saying that happens, but it's just one of them. If you've got all your information correctly in place and everything, it's just one of them that you're trying to prevent, to come back and, just cut the lengthy audit within your business per se.
Yeah, Dan, you're having some audio issues.
I'm echoing, I'm soft out.
You were sort of cutting in and out a little bit.
Okay, sorry.
That's okay. I think it feels sounding a little better now. So what about if you were a farmer receiving a grant? How do you deal with that? Like I guess if you were receiving a grant from, say, the federal government, you wouldn't issue them a 1099. You would be receiving the cash. Like, how do you deal with that?
If you're receiving the 1099, that's going to go on your tax return as a 1099-G or grant. You have to account for that money because it's you received that 1099. So there's specific lines within the return in which you would put that or place that income for your business. I mean, when we record it as sales, it's a different kind, but you still need to account for all that as income on your tax return.
What about if you are renting land from another farm? Do you need to issue them a 1099?
Yes.
A 1099 on that rent?
Yes, as long as they're not incorporated. So as the same rules apply, if they're a corporation, then you do not. But if they are sole proprietor or not incorporated, then yes, you would issue them a 1099 for that rent.
All right. If you receive 1099s, don't you have to file a Schedule C and are responsible for self-employment taxes?
Farms don't file. It depends on your business structure and your business from that end of it. Farmers receive 1099s and they don't file a Schedule C. They still file it on their Schedule F. That then being a 1040, everything will flow for the self-employment tax. If you're looking at the business and the partnership, it goes to the the LLC, it goes to there, and it then depends on how everything flows out is how it would be taxed on that end of it.
Gotcha. Okay. feel like that we've reached the end of all the questions as they are. So if you have more questions, please feel welcome to continue to drop those into the chat box. We still have 15 minutes left. I don't know if everybody's, so Chef Fresh asks, so nonprofits are technically incorporated, correct? So you don't need to give them a 1099?
You don't need to give them? Chef, are you saying if I'm buying produce from you, I don't, or not, or whatever I'm getting from you, I don't need to provide? As like, if you're doing the catering, that would be broke out a little differently, but I would have to look at the final rules on a nonprofit to make sure on a 1099, and that's maybe why you are receiving. If you're saying you are incorporated, you do not require them.
I'm wondering if you are required to issue. I know that we have mentioned that if a company is incorporated, then we don't issue them a 1099, even if we're providing them, even if they're receiving a certain amount of money for services or whatever. But are nonprofits incorporated? Because I think they have is it like a nonprofit Inc. or something? I was just wondering if you don't issue them 1099s in the same way as for profit incorporated businesses.
The biggest issue on that is, do the individuals or the people issuing you a 1099, do they know you operate as a nonprofit? And maybe that is why or whatever they still send you that and request that information. I can't answer. I'd have to do some more research on that end of it, why. But from a reporting standpoint, it would be reported on the same form and all that information. But to what extent the information, the nonprofit versus the incorporated, that way I cannot answer without doing any more research. I have to do some more research.
I'm wondering if we issue a 1099 for if you're doing land leasing from a nonprofit or purchasing other services for them, do we issue them a 1099, or are they treated like a corporation or an incorporated where we don't issue them a 1099 for all of that?
I have a couple of customers that are clients that we that has they're a nonprofit that have their conservancy, and they have hundreds of acres and the land is rented. The clients send them a 1099 because it is a big chunk of money. So it's just one of them. They want to double protect, even though if they do not need it. For when you're sending an individual, it's just kind of one of those others. So it's kind of, I guess, would be almost in the comfort level on your end. The land rent, you get a big chunk of your expense, and you just want to make sure you're covering your basis.
So is that in general, if you have vendors that you're paying out annually more than $600, is it just in your best interest to just issue them a 1099? Is it not going to hurt them if they didn't actually need it?
Yeah, it's not going to hurt you or the individual receiving it. You're not being fined or that way on your end, on their end. They may be discouraged that they're receiving one, but from your end of everything, if you're collecting all the information, if you're sending 10 or 12, whatever the number may be, what's one more going to be? I mean, on your end, if you've already captured the information, it's not going to derail you any which way of operating your business. It's just how you capture that information. You have it. You feel that it's in your best interest to send them one. So you are making them part of not specifically spreading them out, because you'll have a lot of them. We have a lot that'll say, oh, I don't need one. I'm an LLC. I file well, then you'll ask, well, how do you file your tax return? And they're like, I don't know. So it's kind of one of them. It's best to be on your end to have that information, because do you know they're operating how they say they're operating, just so they don't receive one?
Right, right. So I think this is a similar question. Does an LLC need to provide 1099s? So if you were the LLC, you still need to issue 1099s to vendors.
Correct.
Okay. And here's another one. If another farmer uses some of my property to grow hay and we have a shared product agreement, do I need to issue a 1099 for the value of the hay?
I would have to go into the agreement. That can be, because I don't know how the agreement is wrote up. Is it on shares? Is it on the cash basis? You're putting everything in and whatever comes out is mine. You know, I don't know, you know, is it on a 50-50? I can't answer without reading into how it would be. Go back to how it's set up.
They're trying to get the intel. They say shares.
There's,
If that makes a difference. I'm sure, yeah. Chinty Mini Farm, I think there's, you know, these are very unique, personalized situations. And so you may want to talk to a tax professional independently. Okay, I think we've reached the end of the questions and we're getting close to time. Oh, Rachel has one more. If you do crowdfunding, do they send you a 1099?
I don't know. I can't answer that question.
That, Rachel, I bet, you know, they all have terms of service, which I'm sure you could spend, you know, a month reading through, but there's probably a lot of information on the crowdfunding website in terms of like what they offer and what kind of tax implications there might be. Okay, well, I think that's the end of our questions. So let's start to wrap it up. Let me see if I can share the slides again. Okay, questions are over. All right, so thank you so much, Kristy and Daniel. Kristy and Daniel will not be back with us next week. We'll be joined by a different professional from Compeer, but thank you so much to Kristy and Daniel for providing your insight and experience and knowledge. It has been super valuable. We do have a short evaluation poll. So Jacqueline, I wonder if you could launch that for me now. It's just 2 questions to answer quickly. This presentation was made possible with support from the Roots to Farm Alliance. So please go to roots2farm.org to find more information about upcoming events and resources they have available. And Compeer Financial, we are very grateful for presenting this series for us, and you can find their resources, events, and all kinds of information at compeer.com. If you want to know more about our happenings, you can sign up for the Land Connection newsletter at thelandconnection.org. And I've lost my place. All right, so please join us next week as we're going to get much deeper into taxes. So I'm sure it's the event so many of you have been waiting for. So look forward to seeing you again next Tuesday, March 23rd at 8 a.m. And I will be sending out the slides and recording of this presentation later. So thank you so much for joining us and have a good day.
Thank you.
You know.
Thank you.